Let's take a look at your market news now. Asian shares were trading up today on the back of gains in energy stocks, higher demand for oil, and President Donald Trump's decision to withdraw from the Iran nuclear deal have led to an expectation of a tightened oil supply. Tokyo stocks traded in positive territory, buoyed by a positive lead from Wall Street, but investors remained cautious amid a Japanese corporate earnings season. The benchmark Nikkei share average ended up 0.4%. Hong Kong stocks rose higher after 3 straight gains. The Hang Seng Index closed up 1.0%. Next week, Chinese top officials head to the United States to continue to thrash out an understanding with their counterparts in the US. Mainland China stocks were also up, although not to the same degree as Hong Kong. The Shanghai Composite Index rose 0.5%. Wall Street stocks rallied last night as surging oil prices boosted energy stocks. This followed US President Donald Trump's decision the previous day to quit a nuclear deal with Iran. The Dow Jones Industrial Average rose 0.75%. The S&P 500 gained 0.97%, and the Nasdaq Composite Index added 1%. For more on the markets, we cross to Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. We're seeing oil prices rise to about 3.5-year highs off this cancellation of this Iran nuclear deal.
Yes, that's right, Nzinga. That happened pretty much yesterday. Well, they were at 3.5-year highs even before yesterday. But of course, oil prices ticked up through $77 a barrel. And that's on the back of the US deciding to withdraw from that Iran nuclear deal, as you mentioned. But there are lots of other factors at play. You've got low production coming out of Venezuela, which has got some serious issues economically. And then, of course, with the decision by Donald Trump, you know, there are concerns that there may well be tensions and that indeed Iran won't be able to export as much oil as it normally does. I think it produces about 2 million barrels a day, or at least exports 2 million barrels a day. So so these are some of the reasons. And generally speaking as well, in the Western Hemisphere, in a few months' time, it will be winter there. And of course, the oil prices could go up even further. So the big question that people are asking, are we going to see the level of $80 a barrel tested? I think probably so. I mean, it's only $2.50 away from that at this moment in time. So we wait and see what's happening there. All share index is in positive territory in line with global markets. It's an interesting situation because we've constantly been told that once the US 10-year Treasury yields go through 3%, it should automatically see equities markets behaving in a different way. We should see a sell-off on equities markets, but we're not seeing that. We're seeing markets in positive territory. So maybe people are still looking at the fundamentals of the global economy, still seeing it running strong, particularly the United States. And then in terms of the local currency, that has actually firmed by 1%. So it's doing quite nicely, but of course it's nowhere near where it was a few weeks ago. Let's take a look at the indicators. Well, I'm joined by Ian Cruikshank. He's the Chief Economist at the Institute of Race Relations. Thanks for joining us, as always, Mr. Cruikshank.
Good to be with you. Thank you.
Stuff. It's been a while. As I mentioned, US 10-year Treasury yields, they have breached the 3% level. They've gone through 3%. And as I explained about what the theory says, that's not happening in practice. So what's really going on with global markets right now?
Well, let's just look at that 10-year Treasury rate. How dramatic is it? It's been coming down since 1985. That was when we had Black Monday, when we woke up on a Monday morning and the Dow Jones Industrial Average had dropped by 22% on the Friday. And it was a major impact on markets, and then interest rates were slashed. Since then, we've been in a declining interest rate trend. How far is that? 30 years. and interest rates have gone down to a fraction of what they were, what has it done for overall financial activity? Not doing much at the moment, is it? We had quantitative easing and now that's being withdrawn. But that change, if it is maintained, and that 3% cut says that it's quite a possibility, it means it can impact negatively, slow down economic activity throughout the whole world economy. You say, what does it mean? Well, if somebody was borrowing in a startup business at 1%, and now it's 2% or 3%, that's only 2%. It's 3 times the cost of funding. And that's the impact that isn't generally realized, and I think that's why we're not seeing it coming through in markets yet.
So the realization, when people like yourselves are heard, will actually see markets change their behavior.
It could well do that.
And then, of course, the big story is oil.
Yes.
My colleague Nzinga asking me about oil. Mr. Trump withdrawing from that Iranian deal. What's your short to medium term outlook for the oil price?
Well, let's first of all say, you mentioned Venezuela just now. And, you know, Venezuela built an economy. It was the 3rd largest producer of oil. When oil was at $130, when it was slipped back to $40 was another matter. The country went almost insolvent. They lost control of their currency. Their currency in 1 year went from 100 bolivars to a US dollar to 650. That is what happens when one loses control of a currency. We see it in the declining the mining industry. What's happened to our gold production? You know, these are absolutely plummeting back, and we, instead of having 500,000 people employed in mining as we did 30 years ago, we've got 100,000 now. And that's the impact that's coming, and I think that is how it's going to slow down our economy as well. But it just says we've got to brush up on technology, we've got to stop trying to get people to work with picks and shovels, we've got to install machinery and become far more efficient in the way we go mining.
Just sticking on the oil issue.
Sorry, I didn't answer your question.
No problem. There was still insight there, not a problem. But I wanted to stick to the oil issue and ask about what it means in rand terms and what it means for the cost of living in South Africa.
Nompu, this is terrifying. At the beginning of this year, a barrel of oil cost us $600 rands a barrel. And after all, we've got to have rands to buy the dollars to buy a barrel of oil. It's gone from 660 to 980. That's a massive change. That is the number of rands we need to buy a barrel of oil. 2 reasons: the higher oil price. The oil price has gone from $50 to over $75. That's 50%. That's the way to look at it. And I think that's huge. And the rand over this period is quite a lot weaker. If the rand does weaken further, then even with a stable oil price, we're in trouble on our inflation, on cost of production, on consumer spending. All this is very worrying, I think, if the situation doesn't improve in the near future.
And of course, we're going to get higher interest rates.
Yes, higher fuel prices impact the delivery cost of everything.
Indeed. And then, of course, we've touched on the rand now. A company by the name of Altron, it's an ICT company, came out with the annual results today, reporting headline earnings per share up 19%, revenue up 14%. Doesn't seem to be doing too badly, but it seems to have really got a lot of gains from its UK interests.
Yes. Bytes Technology, the major company there, revenue up by 49%. Wow, now that is performing. What they are doing is cutting out dead wood, cutting out those areas that are not giving a value contribution to the central company. And it's about time they did that. And it's really, I think the new leadership, the new CEO is seeing that this is happening, and they won't take on something just because it sounds good or looks pretty. It's a question of saying, if it doesn't add value, cut it. And what's being left is the productive part of the company. And with this business growing so strongly in the UK, I think on a currency way, it'll help to promote the South African currency as well.
Now, today we've had quite negative data come out. I mistakenly told you that manufacturing went up. It's actually gone down.
Yes.
So manufacturing has gone down by 1.3% for March on a year-on-year basis, and mining is down about 8.5%.
Yes.
Mining production is down about 8.5%. year on year for March as well. What does this data tell us? That's for the last month in the first quarter. What does it tell us about what we can expect for the first quarter GDP number? Oh,
I'm glad you came to that. Two of the foundation stones, mining and manufacturing, are just not helping us at the moment. On both, we should be getting an advantage from a weaker dollar, a weaker rand against the dollar in our exports, but we just don't seem to have the capacity to bring down our cost of production to be able to promote this. I think that these factors are going to mean we're going to have it turned into higher costs, higher production costs, higher consumer costs, higher business costs, and I think we've seen the low point in the inflation cycle. We're not going to get it down below 4% again. I think we'll start moving towards 5 and maybe towards 6% by the end of this year. Well, you know, if we're slowing down business activity to such an extent, I'm afraid that looks like an inevitability. So looking at GDP as a whole, looking at these two major sectors, I think that it's optimistic to just feel that we could get anything over a 1% growth this year. I think that it may be just hovering along between a low and no growth scenario for the next couple of years. And prior to the election, of course, there's going to be no new investment. We're going to be at a standstill, understandably.
Of course, a lot of uncertainty ahead of a national election next year, as you say. And thank you very much. That was Ian Cruikshank. He's the Chief Economist at the Institute of Race Relations. After a short break, Nzinga has more business news for you.